Good morning and happy Thursday, everyone. Today's the last trading day of the week, so it's definitely going to be an important day. One, just for, I guess you could say, the schedule, but also for movement. Over the past couple of days, it's been pretty bullish, or pretty bullish, you can say, which is awesome to see. Right now, the market is looking pretty good. The SPY is just inching up there. It hit a pretty good move in after hours, so that's awesome. Tom, one specific group of, I guess you could say, ETFs that I'm looking at are really gold and silver, so GLD and SLV. Over the past year, they have not got they've not had any major moves, and they really haven't had too much attention. So it looks like they're finally starting to pop back up. So they're definitely on my radar.
Yeah, like you said, for the whole past year and even longer than that, almost like the past year and a half, gold has just almost been in a pretty bad downtrend. Now, it has been holding the 160 support very well, which has been awesome for gold. But you're right, it looks like it's finally getting back up above this trend line here. And I'll be honest, we got back above it a few weeks ago, and then we came right back below. So hopefully we can stay up above this time. And I'm really waiting for us to break out up above 170. I think that's going to be a huge level. Once we finally break that, I think we might get a move up towards 180, and then finally maybe go touch that upper resistance level there.
Yeah, and one thing I will say with gold and silver specifically is you can't really go wrong with them holding them for the long term. One thing though, especially with GLD, is it's really hard to trade for the short term. There are so many gaps in the chart, and it's just you probably don't want to trade this for the short term. One, because it's so volatile. Two, the options pricing is actually not bad. It's just there's a lot of gaps in the chart, so it's even if you get a longer term position on GLD shares, or maybe a short put, or maybe a long term call, even if it goes against you in the short term, most of the time it ends up recovering.
Yeah, it does. And like Mike said, there is lots of gaps on GLD's chart because, GLD follows /GC, which is the futures, and they're open all night long. So sometimes whenever China's market opens, sometimes we see gold get those very volatile moves overnight. And then obviously then when the market opens, it has to kind of gap up or gap down to, come back to reality with it. And GLD actually does trade 24 hours now, which is nice, but we can see, Mike, how it has all these weird prints in after hours. It never looks quite like /GC does. So if you guys ever want to look at this overnight, just check out /GC, and it'll be it's almost like it's just a different way to look at gold. It's just the gold futures. Obviously it's not the spot price of gold, so it's going to be a little bit different, but it's still pretty close.
For sure. All right, so looking at the market so far today, it looks like actually Chewy's leading the way for me, Tom. CHWY, it's up pretty close to 2.5%. The movement at open is pretty good. It looks like we have some resistance right around $57.75. Some decent volumes coming in. I think this one looks pretty good, even on the daily.
Yeah, I think it looks great. The daily chart, I think, looks even a lot better than the intraday. But man, if we're able to break out above that resistance you pointed out, at 57.50 or a little bit higher, that would be amazing. I think for Chewy today, lots of stocks look like they're back in the green, Mike. It's a good sign. We had two awesome green days in a row so far this week, two green days in a row, and I'm just so glad to see it continuing up. Hopefully Chewy can break up above. It looks like they're continuing to run here, Mike. And while we have Chewy going, I actually have LVS leading my watch list. It looks like they're up 5.5%. They might break that pre-market, or is that pre-market? Yeah, they might break that pre-market high from very early this morning at 39.20 there.
Yeah, so LVS, MGM, and Win are looking really good right now. I actually read some news on this earlier in the morning, and Win and LVS are I guess you say more affected by this scenario than MGM is. But either way, basically, there's been a lot of heat going on in China, especially in regard to casinos and gambling and all that stuff. And basically, I believe China did a 45-day, I want to say it was a test period or something like that. And then that period recently just ended, and apparently it's pretty good for these stocks. So I just skimmed the article this morning, and long story short, I don't want to say good news coming out of China, but it's better news than everyone was expecting.
Yeah, that's definitely great news considering, everything that's been going on lately. Like we've been having like delistment scares and everything like that. So I'm really glad to see that these stocks are recovering. I'm glad to see some good news finally come out of there. And Mike, they actually like these stocks like LVS, for example, actually bounced right off of the like $35 support. We actually double bottomed right there. And this is actually setting up to be pretty good, I think, for the longer term, Mike, with the double bottoming there and it bouncing off that same support that we bounced off of last February. I think that just gives us so much confidence here. Like, man, like if we start to see this break out above $40, who knows how high this thing's going to start to go in the shorter term.
True. Yeah, I'm really eyeing up like LVS and Win for like potential trades. Like they're at a good level. It's just like I probably would hit them with shares rather than anything else. I mean, if you can scoop them up at like $90, like I feel like that's a pretty good price point. I'm just looking back throughout history, like especially on this Max Weekly, like this one has been all over the place over like the past like 15 to 20 years or so. We could see back in like 2007, this thing was also at like, I guess you could say like $90 and it ran all the way up to like 160. So I feel like it's at like that lower end of the range. So I don't know. I'm tempted.
Yeah, I feel like it's at the lower end too, and I feel like it's kind of bouncing on that support pretty well. And like you point out, there's some good news, and we haven't had some good news out of these stocks. It seems like in a very long time, and I'm really glad to see it doing well, Mike. LVS Win. I know that I don't know why they're affected by China. I mean, obviously they have a lot of influence in China and stuff, but you would think these other stocks like MGM would have a little bit more of effect too, but obviously they've just been powerhouses.
I'm pretty sure LVS and Win have like more hotels in China, like the Macau region or however you pronounce it. But I'm pretty sure they have more hotels and casinos there than MGM. But I could be wrong.
Yeah, I mean that makes a lot of sense. I know that Stephen Wynn was trying to really get into China a lot back in the day, but I haven't really kept up with it too much in the modern day. And, looking at it, I feel like LVS and Win are just in such good spots for the longer term. And the thing is like MGM's great, they're awesome, but to be honest, they're, I'm not going to say they're too overextended, but, they're pretty high compared to the rest of the casino sector. Like, man, like they were pumping there for a while. They were almost at $50 a share just a couple weeks ago.
Yeah, I'm pretty sure their BetMGM app is doing pretty well. It's actually a competitor to DraftKings, believe it or not. But I know that definitely gives them like the edge because like when you compare like, or at least I was looking at like some of like the larger casinos and then their online betting apps and like BetMGM it's not like huge like FanDuel or DraftKings, but it's definitely up there and it obviously would help them. So that's good to see. But yeah, I mean, it's definitely holding up relatively well. And then, like, even if you check out Caesars, how's that one doing?
CZR, they're doing pretty well. I would say this one moved in a similar way to MGM. It really broke above those pre-COVID highs. And yeah, it looks like it's holding up pretty well. It's not moving quite as good as MGM, in my opinion, but I will say it looks pretty decent. And there's a huge support on Caesars around $80. And, we've been bouncing pretty close to that. So I think Caesars looks like it's pretty good too. It almost looks like it's trying to, come back up from this recent dip it had. They recently fell below 100 and ran down towards 80.
All right. So looking at some of the plays for today, it looks like Microsoft is looking pretty decent so far. Microsoft and it looks like actually banks are doing pretty well too, Tom. So I would say like JP Morgan and the banks are actually looking even stronger than Microsoft today. JP Morgan's up nearly 1.5% already.
Yeah, look at that. That's a huge breakout with JP Morgan. They're up above that 158 resistance from last Friday. I think it looks pretty good. And man, they are running. I remember, Mike, like last week, we were hyping up the bank stocks. Remember after Powell spoke, banks were doing amazing. And then they dipped down this week. It looks like they're coming right back up. I wonder if banks are going to go green at the start of the new year, if they're going to start to tumble over. It seems like ever since Powell spoke, we've been all over the place with these stocks, but I hope we continue up. Bank stocks are huge for the market, like everybody knows. And, there's some of the bigger stocks out there and they don't just influence obviously themselves. Like whenever banks do better, I believe it just helps the overall market out. And, obviously like if banks are doing better monetarily, it should show that the economy is fairly decent.
Yeah, your internet's cutting out a decent amount, Tom. So hopefully that fixes itself. But there we go. It looks like George said we got liftoff on MU. So let's take a look. MU is looking pretty decent today. It's up 1.5%. It's actually breaking out. What is it? It's just under $92. It has a lot of momentum, some good volumes flowing in, and yeah, this one's been on a pretty good uptrend.
The setup on MU, do I sound a little bit better?
Not really, not really to be honest, but yeah, I mean, I could hear you for the most part.
Yeah, I mean that's good at least, but yeah, I mean MU's been in a good setup, I think. Honestly, there's been a huge range between $80 and $90 just about. And I'll be honest, once we broke up this week, I could definitely see this continuing to the upside. Lots of people were saying it might fall after that huge drop, but man, that was some pretty good earnings they had, and I was really glad to see it go. And honestly, I'm glad it continued. I know that it's been consolidating up here for the past few days. It kind of looked like it might have wanted to fall down, but hey, I'm glad to see it breaking and running. And who knows how much this one's going to continue. I'll say, looking at the chart, now that we're up above $90, I could see a pretty quick pop up towards 95 over the next couple days.
There we go. And we have Shelly saying, good morning. The SPY looks good. Levels to watch, please. So looking at the SPY, it's up I guess you could say 0.5% so far. It's been on an awesome uptrend over the past week. And Tom, it's really breaking out. So what levels do you have for us?
Yeah, it's really running. Like you said, we just broke up through that 470 resistance, which I've had on my chart for a long time. Now that we're up through 470, I'm definitely seeing another one up here, right around 472.50 to 472.75. It looks like there's definitely one right there. There's been a few touches and bounces. I would say if we could get up to 472.50, that would be a pretty big pop for today. That would be rising another 2 points on the SPY, which I think would be a pretty big move, kind of like a move like yesterday. So hopefully we can get up towards that resistance. I think that'll be awesome. And with the way it's breaking out, Mike, I don't think anybody expected a week like this after what we saw Monday. Monday morning was awful. We saw the SPY gap down, start to hit this low of 452.50. And then obviously we've been going back up the past few days with such explosive movement. I just can't believe what we're seeing here. It looks like, Santa definitely forgot us on Monday, but hey, as we got closer, it looks like the rally came through. I think it's just awesome to see, Mike. And like I said, that was pretty scary to see SPY, Apple, and all those key stocks drop down Monday morning, but hey, they really recovered.
True that. I mean, I definitely don't want to complain about the past couple of days, like you were saying. It's definitely looking pretty good, and I'll definitely take it to end the year. And then Hunter said, Tommy Tenders and I are twins with the internet right now. Yeah, it seems a little rough, but hopefully it fixes itself. It seems like it's getting a little bit better, which is good to see. But back to the market, it looks like, I mean, Tom, I don't know about you, but a lot of stocks on my watch list are, I think it's 50-50 right now, red and green. We are seeing some selling pressure with, I guess you could say, Tesla, a little bit with Palantir, a little bit with NEO, a little bit with DraftKings. Zoom's definitely taking a hit. What are you seeing?
Yeah, some of these EVs, I remember Simp and I were talking in discussion chat before, and it looks like some of these EVs like Lucid are taking a drop. I wonder if he was saying he's playing some General Motors puts. It looks like General Motors is holding up a little bit better than some of the other ones, but seems like Lucid and some of these other EVs like NIO are taking a bit of some hits today. So maybe we'll see a little bit of a drop out of these stocks. I know that some of the China stocks were not looking too hot today, Mike. It looks like BABA's running down. So maybe that'll make some of these stocks like NIO also get moved to the downside. But I was really hoping to see NIO go up this week with the growth stocks, but it looks like the China news might be slowing it down a little bit. And Mike, actually getting to the bottom of my watch list, we have a good old AMC actually. Looks like this one's starting to tumble back over, unfortunately. We're falling below this $28 support. We're also breaking back below the 1,000 SMA. It's definitely not looking good today for AMC. And man, I was really hoping to see this one up to end the year just to, boost some confidence.
Yeah, I was just going to say that. AMC is down 3% today, and there's definitely a lot of selling pressure coming in right at open, and it's actually falling below a pretty major support right now, right at 28. So, I don't know, Tom. It's looking pretty rough. The past couple months have been really, really rough for AMC. And like the most recent lows were right around like $20 and like 30 cents or so. So I don't know. I mean, it's definitely not looking good. It's like one thing to keep in mind is like the lower this one goes, and for like the longer it takes, the less the probability of a short squeeze happening is. So it's like, like for example, when AMC exploded from $11 up to 72 in like a month or like a couple weeks, that was horrible for hedge funds. But like when it just like lingers for like months and months and months and it falls, like these hedge funds are actually put in pretty good positions. So it's like at this point, it's like every day that goes by where the stock does not explode to the upside, in my opinion, it definitely lowers the probability of a short squeeze actually happening.
Yeah, me too. It definitely does. And, I was hoping that this stock would start to move with some of this Spider-Man hype, to be honest. But, it seems like it got some hype early on in the week and then the hype went away. Man, it looks like we hit off of some pretty big resistances. And like you said, it puts these hedge funds in better places now that this stock has been consolidating, because they're able to, obviously open up more positions. They're able to, work around the main problem. Like obviously when it first shot up, they had a lot of issues, but they can start like obviously shorting it up at the top and, doing all types of stuff. And I'm sure that they were even long it for a couple days there, like given everything that was happening, like who knows? I don't know how they were trading it. I wish that we could see, to be honest. That would make for some awesome stuff if we could see each individual small trade. But man, it's a crazy setup. Obviously AMC is crazy, and it's not our favorite for the longer term. So even though we're talking about it, keep in mind we talk about it normally because there's a lot of hype with it. Generally, we don't, we generally just don't condone buying it for the longer term. We just feel like that there's other better sectors out there. Obviously, the movie theater sector is just one of those sectors that's just been getting beaten down over the past like 10 to 20 years.
Yeah. And another thing too is like, let's say, like you said, like when the stock was at, I don't know, maybe 60, 65, $70 a share, they could have easily been shorting it at the top. And let's say they didn't even do that. Let's say they just held their original short position, and now when the stock was at $20, or now when the stock's at $27, they can just buy calls to like hedge themselves. It's no different than if you have a share position and you buy puts, just a protective put. If they were to buy calls, it's just like, I guess you can say a protective call. It's just protecting a short position. So it's like, at this point, there's so many things that they could do to protect themselves because the stock's lower, and more importantly, the IV's lower. And then on top of that, I've been seeing some huge trades going on with AMC's options for the past couple of months now, where it's like, I really don't think they're in a position in as bad of a position as a lot of retail traders think. There's so many ways to like hedge and protect and all that stuff, and especially when you're just backed by hundreds of millions of dollars, it's like, it's like the risk profile changes a bit, you can say. And then another thing is like every day that goes by, I feel like the retail trader sentiment is slowly diminishing. I could just tell, like back in June and July, everyone was talking about AMC on YouTube. Like it would just be spammed all over the YouTube comments, and like now I would say like that hype is diminished by like probably like 90 or 95%. So with that comes maybe closing out share positions, and it just looks tough.
Yeah, it's just a tough situation. Obviously there was lots of hype, and for anybody who's stuck in this one, it's just like Mike said, it's going to be a very tough situation, especially if you're stuck in and you have like a super high price. Obviously you want it to come back, but I would say it has probably more of a chance to go down. But to each their own, and hopefully it goes back up for everybody. In the end, I really hope it does well, and hopefully the movie theater business starts to do better. I'll be honest, Mike, like I like it. I like going to the movies and I like enjoying it and everything like that. It's just that it seems like it's just a dying sector, and I really hope it ends up doing better. But looking at some of these other stocks in the market today, Mike, leading my watch list to the downside is AMC, but not far behind, we have Moderna, one of those big vaccine stocks. And man, while Pfizer's been making some headlines, it looks like Moderna's starting to really tank off.
Yeah, they're definitely falling off the board. I mean, their most recent earnings was pretty good. Their EPS has just been exploding. And it's been doing very well over the past couple of years, but you're right, it's definitely taking a hit. And yeah, I mean, there's like a huge divergence between Moderna and Pfizer.
Yeah, there is. It's kind of weird to even watch, to be honest. I wouldn't have thought that Pfizer would get this much more of a market share, but they did just come out with this COVID pill, so maybe that's a good thing for them. Maybe that was getting priced in for the past couple of months. I know that news has definitely been in the headlines, and it finally got approved by the FDA, which is awesome to see. And like you pointed out, though, Moderna's EPS has really exploded, which is awesome to see. I think that shows they have a lot of growth, and even though that they're low, like that, those type of numbers might hold up. Like obviously, like the EPS might start to come down if people start gravitating away from COVID and everything like that. But I still feel like they're going to do pretty good as a company in the long term with these types of numbers.
Oh yeah, I'm with you. No doubt. Then we have Alex saying, how does Palantir look for today? So looking at Palantir, it is up like 0.3%. I will say it is holding its ground very well. It's looking pretty good so far. There's a good amount of buying pressure flowing into it. There's support right around $18.80 and another support right around $18.65. There's resistance right at 19 and then another level right at like $19.11. So I would say it's looking good so far, but not great. There's definitely some mixed momentum, but it is holding its ground.
Yeah, it is. It looks pretty good. I would say Palantir, it's been touching its like support lately. Obviously, we've been bouncing a lot down here, consolidating. I really hope that this is forming a bottom, Mike. Like, I feel like every time with Palantir lately, it's just been continuing to sell off, and I'm really hoping they can start to go up. I know they had that good news, like with some government contracts and stuff like that earlier on in the year. So hopefully that helps them. I think it will. And with the way these supports are starting to form, I think it looks like a pretty good play to the upside, especially for the shares, like you pointed out. You don't have to worry about time or anything like that. And I just think that looking at it, it's just going to be an amazing stock, especially if we could just somehow forget about it for 2 years, because obviously everyone gets all these mixed emotions and everything in the short term. But I feel like just come over the next few months, we'll be happy.
I'm with you. All right, and then we have Freddie saying thoughts on leaps for CHPT. Let's take a look. So it's down 2% today, so that's fine. IV's like 74%, but it's towards that lower end of the range. It's not bad. I mean, my initial thoughts are like I don't love how high the IV is, but it's relatively low, so that is good. Let me take a look at the pricing really quickly. Like if we went out to if we went far out, maybe like January of 2024, if you went at the money, your break even would be like around 20, well, I guess you'd say like $28 for January 2024. Yeah, I would say that's pretty decent. Yeah, I mean, the pricing's not bad. So I like the risk-reward ratio. I would not say there's like a very high probability of it working out, but if it does work out, it should be a pretty big winner. So I would say it's like kind of like a high risk, high reward setup, but yeah, the pricing's not bad.
Yeah, I mean, I like it. I think it looks pretty good on the daily chart. I mean, as long as we can hold this support, I think it'll be decent. It kind of looks like we might break this support over the next few days, so hopefully that doesn't happen. But, I feel like that these charging stocks should do pretty well. And like Mike said, it's priced pretty decent. I'm looking at the chain myself, and, there is some big spreads on some of them, but as long as you can work around the spreads, I think you can get some pretty decent entries. But personally, I think just getting shares on this will be the way to go. Unfortunately, I feel like ChargePoint's not setting up as well as some of the other ones, Mike. Like whenever we go look at some of the other ones, like Corsair, for example, you can see it's starting to form a pretty big support down here. Like it's ready to go back up. And even today, it looks like it's slightly green, but ChargePoint is just, they're right on support too, but it looks like their support isn't forming quite as well.
Yeah, and like another thing too is like if you didn't want to get too risky with like the leaps, what you can do instead is I know how we always talk about, cash secured puts. Like a lot of times, the stock right now is at like $18.35. A lot of times we'll be like, all right, sell like the 17 strike put or like the 15 strike put. But if you're bullish, you can like pick a different strike price and you can get a much better risk reward scenario. So instead of selling like the 18 strike put, like Freddie, if you went out to, let's say you went out to like May of 2022 or maybe let's go February of 2022, and if you sold like the 25 strike put, you will get paid $715 cash today, right? The only thing is that you would need charge point above $25 on February of 2022. If it's not above $25, then you just roll out your put and you just get more time with it. So it's like, but then if it does go above $25, you just made $715. So it's like there's give and take with it, but the point is that if you're really bullish, you have a lot of options. Like, of course, you can go with the leap. It's not bad. It just has its own pros and cons. You can go with shares, or you can maybe sell a put that's maybe in the money with a month or two worth of time, and you can get a pretty good premium. Like if you sold a 25 strike put, you'll pick up $715 cash today.
Yeah, that's actually really good, actually. That's quite a bit of money for a stock that's, I know you're going out to the 25 strike, but man, that's pretty good, to be honest. Like off of only $2,500, like usually you don't get those types of ratios. So it sounds pretty good. And in the end, I like the setup on the stock. So hopefully it ends up going up. And, they're in a very explosive sector. Like if we see these other growth stocks start to explode, the chances of charge points starting to explode are probably pretty high as well.
And like another thing just to like keep in mind really quickly is if you looked at the January 2024 chain and you were to buy the 20 strike call, it would cost you, what did I say, like $800 or so. So your break-even price would be $28. Keep that in mind. Break-even price, $28. If you were to sell the February 18th, let's say you sold the 29 strike put, you would pick up like $1,100 cash today, and your break-even price would still be, what is that? Your break-even price would be significantly lower is the point. So it's like, just my main point is just there's a lot of options you can take in this scenario, but it's definitely not a bad setup. And then we have Vicky asking for levels on AI. So AI is a pretty good company. It's been holding up pretty well too. Tom, what levels do you have for us?
Yeah, in the short term, AI has a huge support coming up around $35. I will say yesterday, we got pretty close. We hit 34.50 intraday and started coming right back down off of that. Looking at like the 180-day, 1 hour chart, $35 is going to be my favorite level I'm seeing at least for today. But for the next few days, to be honest, I think the biggest level to look at is going to be $40 at this upper resistance. That's going to be huge. And then as a support today, I'm definitely seeing 32.50 as being the major level to look at. So if we fall below 32.50, you might want to look at this one to the downside. But to be honest, I think it looks like a pretty good setup going up today. And if we could break up above 35, I think we could start to get a pretty good move up towards 40.
There we go. All right, so good stuff there. Checking in with the market and some of the plays for today. It looks like we're seeing some pretty good movement out of FedEx, Tom, and then even UPS is doing pretty well. So it looks like the two shipping companies are not breaking out, but they are doing pretty well, and they're both having like 2% up days, which is pretty good to see.
Yeah, FedEx is definitely coming back from that downtrend it's been in. UPS is a lot closer to its all-time highs, and I'll tell you, this one looks pretty good, Mike. Like, ever since COVID happened, UPS has been a powerhouse. I know that these shippers have, obviously, their business has exploded with all the online stuff and everything like that. But looking at FDX, I really like it. It looks like it's starting to go back on the uptrend here. And to be honest, I love the way it broke out above this 250 resistance. I think that was a really good technical move. And I think we could see this one maybe come up towards like 275. But keep in mind, this one's kind of like a slower mover. I don't think we'll see it explode up or anything. It'll probably take like a couple weeks or so.
Awesome. All right, and then we have Alex saying, what do you think of Peloton? It's at a pretty good level in my opinion, but it just keeps like slowly fading off. Like, I like it, but it's slowly fading off. Like even Zoom's doing the same thing. Like these COVID plays were looking really, really good lately, and then they're just they can't hold their ground. So Zoom, Peloton, and even Teladoc are all struggling.
Yeah, the good news is that Zoom is still up above that 175 major support. So to me, as long as we can hold that, I think it's okay. But man, I'm with you. In the short term, it's been brutal. I can't believe that this week, while we've been seeing a lot of stocks fly up, Zoom's been kind of, lagging behind. Like, man, we've been seeing like DraftKings and a lot of these other stocks get some pretty nice green moves. And it just sucks to see some of these ones lagging like this.
Yeah, and then back to Peloton just for a second. Like I will say, it's definitely struggling more than Zoom is. Like Tom pointed out, while Zoom is at least holding its ground, Peloton's just like slowly fading off. And then Vicky even mentioned how Peloton got downgraded again today. So it's just like it's just struggling. But in my opinion, it's at a good level for like the long term. But I do like Zoom more though. But yeah, it's just it's looking rough.
Yeah, I like Zoom better too. And I really hope that Peloton can get better, Mike, because I felt like they were a decent company. Like I'll be honest, like I like their whole, their whole like take on working out. Now, I'm not saying that, Peloton bikes are for me or that I'm going to be like watching these classes. But in the end, I feel like that, like lots of people liked it. I thought it was a very cool idea. I know they got some really bad publicity there whenever people were getting hurt and stuff like that. Obviously, it's just been on a huge downtrend, and I hope that they can get back up there. The one thing that I'm seeing that's concerning is that EPS is just getting like worse and worse, which is not a good sign. I really hope that they can get profitable again. And I know that they were exploding during COVID, but they need those subscriptions back, or they need to come out with some new types of bikes or something.
Yeah. All right, we have Vicky saying hit the like, guys. So yeah, if you guys like the stream, it would help us out so much if you hit that like button. We really appreciate all of you joining, and I want to welcome everyone to the stream. So thank you guys so much for joining. Welcome Alex, Rick, Hunter, George, Vicky, Ant, Mike, Shelly, Freddie, and did I miss anyone? No, I think we're good. I think we're good. Yeah, we got everyone. So thank you guys so much for joining. Tom, are you seeing like any major news, any interesting plays, or anything?
I was actually bringing up this awesome like dashboard that Hunter made for us, Mike, and I just wanted to, maybe bring up some of these stocks that we're looking at, kind of like Peloton and Zoom. I thought it would be very interesting to see if we could like maybe get them here on the chart. Now, Hunter just made this. It's a little bit finicky with how you have to put in these tickers and stuff. So sometimes it might take a second, but as we can see, this is actually really cool. I know that Mike's definitely seen this already, but we can see here that you can type in these tickers, and Hunter made this for us as like a Christmas present, but you can see how the EPS is going on these graphs. And the cool thing is like we can look at like Peloton, for example, and we can start to see how their EPS is growing like year over year. And like we can see right here on the EPS growth tab, man, it's not looking too good. Like on the quarterly year over year, we're down 716% on the growth with the EPS. And year over year, I mean, with the TTM, you're down 1,800%. Like, man, this is just not very good numbers. And you can see their revenue is starting to go down. Like for a while, their revenue a couple quarters ago was pretty high, and we can see it starting to fall off. So I don't know, it's just not looking good for Peloton on the chart, and their fundamentals are looking bad.
Yeah, so like one thing to keep in mind is like the charts go from the right to the left, right? So if we're looking at the annual revenue, we could see like 4 years ago, the annual revenue to the box to the left. There. So the annual revenue, we could see 4 years ago, the revenue was like 218 million. 3 years ago, 435 million. And over the years, the annual revenue has exploded, but just like Tom mentioned, like the quarterly revenue has been like dropping off a little bit. So it's just cool, and we definitely want to showcase it because Hunter did a pretty good job, and it just goes to show you that like there's definitely a lot more that comes with stocks besides like looking at the charts, obviously. So it's definitely a cool thing Hunter made.
Yeah, it's really cool. And you can type in any stock, and if Peloton looks, like Mike said, it looks bad for the past 6 months on here, but you can see they've had some great growth over the past few years. And you can type in any ticker you want on here. Like I'll go type in AAPL, for example, and these guys are a really good example. You can see even their quarterly revenue, though, has been going down ever so slightly. But you can see, though, that generally, though, like their year over year, it's just continually going up, which is great to see. And then we can see down here at the bottom, their profit margins are looking high. Their revenue growth is going up pretty steadily. And the EPS growth is also high, which is great. So, this is a very good example of a very good, profitable company. And then you can kind of compare and contrast that to, some of these other growth stocks, which just aren't in the type of phase that Apple is. Like, obviously, Apple's been around for a long time. They've already went through their growth phases. And Mike, the crazy thing is, I remember a long time ago, Apple, everyone talks about remember how Apple had those really bad couple of years there and they went all the way down to $1 a share?
Trying to think, you said Apple? I kind of forgot about that, actually. Hold on. Hold
yeah,
on.
I mean, it might not show up on the chart because of the split adjusted stuff going on. But I remember at the time, I believe it was like whenever they took Steve Jobs off the board, I think that was when it went all the way back down to $1 a share. Everybody was like so surprised.
Yeah, I'm trying to, let's see. When did they take Steve Jobs off the board? All right, so it looks like that happened in 1985. We're going back a while. Let's see.
Wow, well, no wonder it was worth $1 then. Wow.
Yeah, but I definitely know what you mean.
Yeah, and it's cool to see, though, on the chart, though, in general, because the chart's really cool. And, you can type in anything on here. So if you guys are watching right now, if you guys ever want to see anything on the chart here, just, let us know, like, hey, can you pull that up on the chart? Or can you check the fundamentals? That'll be a really cool way to look at it, I think. And, we could always go on FinViz and look, but I love having these graphs. It looks a lot better.
Yeah, it's awesome. Santa did a great job.
Yeah, he did.
All right, so also welcome Jerry, Sean, Miriam, and Rick to the stream. And then we have, let's see, Rick saying, what's up with Nikola? Let's take a look. NKLA. This is up 12%. Tom actually shared some news with this one this morning, and it looks like they deliver. I'm just going to pull it up really quickly. So Nikola came out with some news today saying that they completed the delivery of its first electric vehicle and that more are on the way. So it's up 12% and good volumes coming in.
Yeah, that's actually really good news. And then I even saw some other news that they're actually settling an SEC, that they're actually paying $125 million to settle something with the SEC from a while ago too. So it seems like they're getting a lot of good news coming in. That news of their vehicle deliveries could be huge, Mike. Nikola looks like it's having some nice moves with those deliveries. I remember just a few weeks ago or just a few months ago, Lucid started their deliveries on October 30th or somewhere right around there, I thought it was. And you can see their stock started exploding whenever they started those deliveries. I'm not saying Nikola's going to explode like Lucid did. I think Nikola's a lot worse. But in the end, I think that it's good to see them getting some hype back. But, hopefully, if everybody doesn't know, Nikola's had a lot of shady stuff happen over the years.
Exactly. So, it kind of makes it hard for me to, get into it. Even if there was a great setup, I feel like I wouldn't be the only one. The stock went from 94 down to $8, and they literally just rolled a giant truck down a hill and kind of screwed a lot of people over. So it's even though it's up 12 or 13% today, yes, buyers are coming in, but that can easily be just people who are short a bunch of shares of this company just covering their position. You know what I mean? So it's even if we look back throughout history, it has these little pops every now and then, but to me, that's just shorts covering their position. It's not a play for me.
Yeah, it's not for me either. To me, Mike, like you said, you're definitely not the only one. Unfortunately, Nikola, I think it was Trevor Milton, man, they had some bad issues with what they did. You cannot just say that you have an electric truck with an electric motor in it and then just roll it at an empty frame down a hill. It honestly sounds like something out of a movie or a joke or something, but someone actually did this in real life, with an electric vehicle company to gain funding in the beginning. Man, that's pretty crazy to hear. And yeah, I feel like that's definitely going to kill the investor sentiment. They might get some investors and obviously they could still do pretty well as a company, but It's just obviously it's going to take a long time before they change my sentiment. And I'm sure same thing applies for you, Mike. Like whenever you do something that shady, it's just it's hard to trust you again.
Exactly. All right, so we have Alex saying any resistance levels to watch for MU or AMD. So looking at MU, I mean, it's up 3.5%. What resistance levels do you have for us?
Man, it's exploding. I said earlier, if we broke through 90, I think a nice move up towards 95 would be the way to go. So looking for a dive. Now that would make a huge move today, already 3.4%. I don't know how much higher we can go, but I feel like that 95 resistance might hold up pretty well. And I would definitely target that one up today. But it looks like right now we got up towards like 93, 95. So maybe $94 will be the high. We'll just have to see.
All right, Tom, the connection was a little bit choppy, so I just want to confirm. You said 95 is the main level?
95 is the main one, but it looks like we did hit 94 just now and start to go down. But I feel like 95 is definitely bigger over the longer term.
Sounds good. So 95 is the main level, and then looking at AMD, it looks like this one is definitely in the green, but not as much as MU. Looking at their chart, there's definitely some resistance around like $147.50. I would say that's the main level to watch out for on that one. I don't know if you see anything different.
Yeah, definitely somewhere up there, like around 147.50 to 148. Definitely lots of movement right there. That's what I would target. And I'll be honest, it looks like it's breaking out pretty well. I could see it possibly getting up there today, up towards like 147.50. I don't think that would be an impossible move. And with the way it's breaking out, I think it looks like a pretty bullish setup.
There we go. All right, and then we have Bravo saying, what do you guys think of retail? I bought more JWN today, and then he also mentioned TJX. So looking at JWN, we can see today it's up like 2.5%. This is Nordstrom. The chart looks pretty bad over like the past couple of years. It's not horrible for a dip buy. Honestly, the top, I guess you can say, retail stock I've been watching is GES. This is Guess. It's not like a huge retail company, but they, I don't know, I've been seeing a good amount of bullish flow with them. So it's that's the only one I'm watching. I mean, TJX and, what was the other one? JWN don't look bad. It's just at least JWN has been struggling. TJX has definitely been holding up better.
Yeah, I think that JWN is just it's a bad setup for the longer term, unfortunately. I feel like that it could end up coming up and filling this gap, but I mean, man, you're just talking about buying a pretty beaten down company. Like if we look at the max, weekly chart on them, it's just it's obviously not too good, unfortunately. I like Nordstrom, but it's just it's just an unfortunate thing to see on the chart. It's kind of like JC Penney's, I remember JC Penney's was kind of moving like this in the ending, couple of ending years with it. So I hope that JWN stays around, but Mike, it's I don't know about you, but to me, it's not looking too promising on the daily chart here. And I'll be honest, GES looks a lot better. I don't know too much about them, but especially over the past 6 months to a year, I think they look pretty good to the upside. I know lots of people have been looking at Lulu a lot. They've been dipping down. They've been having a pretty big explosion as well. And my favorite is actually DKS, Dick's Sporting Goods. And I'll be honest, they're actually pulling back pretty decently. I might get some shares around this $100 support.
There we go. All right. And then we have Iranical saying, I can't decide about NEO. It's very low priced right now, but it's also a risky stock. So it is. Every company has their own pros and cons. One thing to consider is that it's actually safer to buy stocks when they're lower rather than when they're uptrending. I know it can definitely be scarier to buy when the stock's downtrending, but if you look at NEO, right now it's at 29. I'm sure when the stock was at $55 and uptrending all the way up to 60, everyone was oh, it's easy to buy in now. It's on an awesome uptrend, but you have so much room to fall, So when stocks are already lower, you can argue that it's safer, because you're getting a lower price and you're getting into the company at a lower valuation. And especially if the company pays a dividend, you're getting a higher yield too. So it's every company has its pros and cons, but if you're thinking about getting in and you feel at some point you want to get in, maybe consider dollar cost averaging. Like no one can catch the bottom, but nowadays with fractional share investing, like you could easily get whatever dollar amount you want. So consider just dollar cost averaging.
Yeah, that's a really good way to go, Mike. I love the way you said that. I think it was a really good way to say it. I think it was just perfect there. I love NIO at the support, and buying low is always the better way to go. I know it might seem too easy to a lot of people, Mike, but buy low, sell high. It's the name of the game, isn't it? I mean, that's what that's like what 3-year-olds think about when they think of the market. But whenever you look at it, buy low, sell high. I know it's easy to say, but it's a lot harder to do than it is to, practice. Like whenever, I know if it was that easy, everyone would just do it. But man, like I know like Mike, like it took me, like I would say probably like 3 or 4 years in the market before I finally started, buying low like this. I know obviously like everyone by the hype and everything like that, but it took me quite a long time before I started, finally like, catching on and buying at the lows. Like everyone always buys like when, like you said, whenever everything's all hyped up and everything. And I feel like it just takes a lot of time to like maybe get that experience, because it takes so much of a good mindset to buy these and hold them and like not let your emotions get in the way, because everybody lets their emotions get in the way and then they'll get out really fast. Or even if it does pop, they might only let it pop like a few points, and then they won't hold it long enough in a lot of senses.
Yeah. Hunter says you're turning into R2D2, Tom. Tom, only if you could hear like what the audio sounds like. It's like, I don't know, it's weird, but we'll get it fixed for the next stream. But good stuff. I'm just looking through some of these comments really quickly. Welcome, Matt, to the party. Mike said, I'm scared of starting a new position. I'm not sure if we're in the clear yet. Everything is still very uncertain. Yeah, so that's actually a great point, and I'm really glad you brought that up, Mike. Like you said, there are a lot of uncertainties right now, but when you think about it, when were the biggest opportunities like in like the past 20 years? It was when everything was uncertain, everyone was scared, and people just they didn't know. That's where the biggest opportunity lies. Like if we go back to even February and March of 2020, everyone was scared. No one knew how bad the pandemic was going to be. Like there were so many uncertainties. The world was crazy, right? And that's when the biggest opportunity was. So, and you can say that for basically any crash or recession or dip or major catalyst or anything, and that goes for, whether we're talking about like a cryptocurrency, a major stock market index, or even like an individual stock. So even though there are some uncertainties, that can be a pretty big opportunity. So good stuff. And then Shelly mentioned Xlnx and then said Merry Christmas. So thank you for that, and Merry Christmas to everyone else as well. Let's take a look at Xlnx really quickly. So yeah, it's looking pretty good.
Yeah, it looks decent. It actually has 3 awesome green days to the upside. Another nice 2.5% update today. I'm not sure how much more it's going to continue up today. It seems like, it's up about the same amount it's been going up the past couple days. So I think it can continue up a little bit more today. But to be honest, it's been moving very well. And I wouldn't necessarily day trade it anymore today, especially with the market being closed tomorrow. But I think it's been great. It looked awesome off that $200 support. I feel like it looks like just an awesome setup, possibly for maybe next week. But just keep in mind, it's going to be you have 3 days, to contend with. We're going to have Friday, Saturday, and Sunday. So it's going to be a little bit longer of a weekend. So maybe holding something over the weekend is not the best idea.
Yeah, so like you said, Friday's off, so today's the last trading day before Christmas. And Tom, I just want to talk about like the schedule really quickly. So like I said, no trading on Friday, but I know we chatted a little bit about this morning in the Discord, but for the first time in a decade, there will be no U.S. stock market closure in observance of New Year's Day. And there's like this weird rule by the NYSE, but basically the market is almost always closed on New Year's Day, but we're going to be open this year. So be prepared for that. I know a lot of people are used to having that first day off, but that's not the case this year.
Yeah, and the good thing is that whenever we look at it, New Year's Day is going to be on Saturday, which is good. Normally, we'll always get that Friday off, Mike, but I don't know. I like you said, I don't know what's happening. I know that if we look at the bottom here, there is like Rule 7.2 and is going into effect. It looks like, and we can see here that last year we were off on Friday, and then in 2023 we're going to be off on Monday. But this year I don't know exactly how that rule works, but it's definitely interesting to see. So definitely know that because it's going to be pretty confusing. Everybody always thinks that we have like a half day here, or the market will be closed here, but just know that this time for some reason we're not going to be off for New Year's. And like you said, Mike, that was what, the first time in 10 years.
Yeah, crazy.
Yeah, crazy. But hey, I guess I always like to say I'd almost rather have the market be open like 24/7. So I'm kind of glad that it's not closed, but in the end, it's good to get some days off, especially around the holidays.
Yeah. All right, so good stuff. Tom, do you have any last minute plays or anything for the rest of the week?
Well, it looks like with the week getting cut short, I don't know how many more opportunities we're going to have right now for the rest of the week. But I will say, Mike, the SPY has been surprisingly well, in my opinion, this week. Like, whenever we look at this, the SPY was starting off pretty bad, especially Monday morning. I definitely was not expecting a huge rise like this, but that 450 support ended up holding up on the SPY, and we ended up going right back up. So it looks like we're having a nice move into this new year. I think we couldn't have asked for a better way to end the week, to be honest. It looks pretty nice. The SPY is moving. We're having a lot of these growth stocks running to the upside as well, which is great to see. My watch list is 50-50, but overall it's been a pretty good week. And, I hope everybody has a really nice, holiday weekend. Obviously, we're celebrating Christmas, so Merry Christmas, everybody. And I really hope that the stock market has as good of a new year as it ended this year.
There we go. And then with the last comment, we have Jesse saying, what about banks being open and settled funds for New Year's? So honestly, I'm not 100% sure. Honestly, this rule with the NYSE is kind of weird with the market being open on New Year's. So I would assume banks would be closed, but honestly, I don't know the specifications or the technicalities of it, to be honest. So not sure with that one, but very Merry Christmas to everyone. Have an amazing weekend. Thank you guys so much for joining the stream, and let's have a great end to the week. So thank you guys so much for joining, and Merry Christmas.